June 29th, 2020, Monday morning. Daniel, is that knock knock because you can hear me? Give me another one just to make certain. Hey, Pablo, I had a little bit of a issue getting on. There we go. Knock knocks. Everybody's coming through. Verify Monday. Can you see the bags under my eyes? It is Monday, May 29th. I've been up since about 5:15 or so this morning, guys, kind of looking through charts, watching the futures. What an interesting morning for futures. We were trading down 200 on the Dow. A lot of talk about Boeing and getting the recertification flight number 1 done today. And the Dow futures were up 100. Now we're up 200 again. So we're kind of popping around all over the place this morning. It's going to be interesting, especially after Friday's activity that we saw in the market. I'm glad that you can hear me loud and clear. Let's start with something that I don't know how to say to you. And Laura can back me up on this, but I'm not looking for her to. Laura's with us today, by the way, guys, instead of Greg. Greg is taking care of some stuff at home. So we have been doing some constructive criticism among our group in Baltimore, trying to figure out how to make, first of all, the live streams better. Also try to make sure that we don't do too much with them in terms of talking too much about individual tickers. You're going to hurt me here. This is where I tell you that we need to stop doing my ticker blitz every day. And I'm trying to find creative ways that we can get around this so that everybody can be happy with it. But it's my favorite part of the day, just sitting here ripping through ticker symbols with you and telling you bullish, bearish, hold, sell, short, etc., price points I like. But what I want you to do today, just as an maybe help me out with an example on how we might be able to get this done. Instead of me going through at the end, don't know it yet, Peter. Don't know it yet. Instead of us going through the end and spending 15 or 20 minutes going through those, I'd like for you to spend throughout the time today, our entire time today, if you've got a ticker symbol that you're interested in. I'm not going to be able to go through it today, but I just want you to type out ticker and then a colon and then whatever it may be. For example, let me give you this. Ticker, colon, INTC. That's it. Submit it like that. Continue submitting them. Continue submitting as many as you like. What I'm going to do is go through those, look through them tonight after we're done here. That's fine. If you want to do a tease, something like that, that's fine. Just make it simple, that make it clear that it's a ticker request and that it's something you'd like for me to look at. What I'm going to do is look and see how many we get from the same ticker symbols. If we get quite a few, maybe I'm going to write some commentary. Greg and I'll put some stuff together, something that I can give it to you without giving, there you go, Barb. Exactly. Go ahead and give it to you without having a borderline on specific investment advice, which is obviously a no-no for us. So all you have to do throughout the chat today is put ticker, colon, and then whatever ticker symbol is. If you've got 20 of them, put 20. If you've got 2, put 2. Not going to go through them today, but what I'm going to do is go and put together some chart reviews and possibly something that I'll deliver through commentary, or even as tomorrow's. Maybe it'll be one of my tickers. I'm going to go through tickers that I like every day given to you. So it'll be a situation where today we're going to look at 2 of them that I think you're going to want to look at through the rest of the week. I hope I get that out of the way. My 11 o'clock people, I'm kind of doing the same thing with. We're going to take today off again just because the dynamics behind this, trying to make it work exactly right. Take another day today. It's a light trading week anyway. So that's what we're going to have to do. Yeah, I know, Zachary. It's great for me too. Maybe we'll find something. Believe me, we'll find something. I'm persistent in that manner. So let's go ahead and start talking about the slides that I do have. And as we go through, just remember, put in a ticker, put in the word ticker, colon, and then whatever ticker symbol you're looking for me to look at here over the next couple of hours, yada, yada. So overnight trading, today's expectations. We always do this. A sudden shift in hedge positions. This is, yes, we'll do it Wednesday. This is something that is interesting to me because we talked about the net shorts in the CFTC data last week, Just as soon as we talked about it, it flip flopped on us like a political candidate a week away from an election. It flip flopped and it flip flopped fast. We're going to look at that, and we're also going to talk about the implications of it. Two stock trades for next week. And these are the stock trades that I want you to look at this week. And then my expectations for trading through Friday. Friday is a day off, remember. So remember to go out and celebrate the 4th of July a day early with everybody else on the 3rd. We're going to observe it on the 3rd, and everybody's going to obviously go about blowing off whatever fireworks they have on Saturday. But so what are we seeing this morning? We're seeing stocks trade higher off positive news. We're coming off a bad day on Friday. Everybody was concerned about how this was going to be. It was interesting. If you watch over the weekend, Dave Portnoy, who has become the Robin Hood of the Robin Hoods here, Dave Portnoy actually was out there saying after one down day, you can't bring us down. The market only goes up. Stocks only go up. Stocks only go up. I love the mantra. I love the enthusiasm, but stocks don't always go up, unfortunately. You and I know that. Anyhow, the way that plays into what I'm looking at today is we had a pretty big down day yesterday or on Friday. We closed on the lows. Now we're seeing stocks trade higher off positive news from Boeing. This is news that we've known is coming for weeks now. It was just when it was going to happen. It's going to be very cool when it does, but that's obviously popping the Dow futures right now. The company awaits to make their first recertification flight today. We're also going to see some pressure on futures on the downside in the energy sector from the announcement that Chesapeake is going bankrupt. Again, news that we've known for a while. Yep, you got the typo, LS. News that we've known for a while. They filed last night, Chesapeake did, for bankruptcy. The stock is up, of course, in the pre-trading this morning, only slightly. But this is the first of many that will be coming to press down on the sector as oil prices continue to list lower. Chesapeake has always been that company that was they were the logo, the sign of the fracking institution here in the United States. And now that we've seen prices continue to start trending lower, again, it's putting more pricing on them. That at one point they were just trying to keep themselves what they call a zombie company, where they could pay their dividend, they could pay their salaries, et cetera, et cetera. Now it looks like they're going to go ahead and try to reorganize, make something of it, see if somebody's going to buy them. That's probably the situation here. We're going to see somebody buy the company instead of it go away. Financial and travel stocks are getting a slight bid this morning. Remember, they were down on Friday, but the market's setting up for a light trading week that's going to move the favorite to either side of the market. What I mean by this is do not take, folks, a grain of salt from what happens in today's trade. We've got too many headlines that are kind of crashing across the screen right now. Not only that, but if you look at what we had over the weekend, China and the United States are starting to kick up the rhetoric there. They're saber rattling, as Jerry likes to put out. So with them rattling their sabers a little more, we've got a situation where you could see some trade volatility coming into picture this week. Trade volatility re-entering the picture. So keep an eye on that. I'll keep my eye on it, and I'll let you know about it. So let's talk about those hedge funds. They slashed their shorts last week. Speculative investors bought a net 206,000 of the S&P 500 E-mini contracts in the week to June 23rd. This is the highest number that they've purchased since 2007. This is one of the things that was pointed out last week. I forget by who, about how net long they had net short they had become, and now all of a sudden they have swung to a net long position. This also goes in line with what we've seen. Short interest as a percentage of shares outstanding of the S&P 500 has gotten down to 4.9% Friday from 6.7% at the end of May, according to data from IHS Market. So what does this tell you? This tells you that, first of all, we already know. When we look at the investors' intelligence numbers, and that's the next slide that I put up there, the investors' intelligence numbers were already showing bullishness. They were all showing us that we've seen as many bulls out there now as we did in February when the market was making a top. Granted, we saw the market at its all-time highs at that point. You still had a lot of people shorting stocks, though, and you had stocks rolling over. Remember, we talked about 18% of the NASDAQ 100 was in a bear market. Right now, that number's up to 33%, 34%. It went up by one on Friday. So 34% compared to 17 and 18%. Big difference there. So from a realistic perspective, from the numbers, more reason to be in a bear market. Yeah, we have investors, the hedge fund traders, and we've got now the investors intelligence people telling us that they are all as bullish as they were in February, even though the market is showing some fundamental chinks. It's not often that the case that these groups often act independently of each other. So normally, the norm here is for you to see the market's making a new high, and the smart money, those hedge fund traders, are net long. The shorts, the people shorting, are net short because they're trying to call a top. And then the retail investor, usually have them coming up, leading up the back end here. They're lagging. And by the time they get to being bullish, the investors' intelligence numbers, it's time to shut out the lights and start selling or putting on those hedges, doing whatever you have to do to start locking in some profits. My point here is that we've reached that point where all three have come together at the same time. And this is either going to be a hell of a bullish party where the S&P 500 is now ready to go up to, I don't know, let's say 3,500. Or this is going to be a party where everybody's going to be in at the same time, realize that the economy isn't what it is. And obviously, we've got the Fed that's going to be pumping money into stock that's going to help us. And we found out this week where they're buying those bonds: AT&T, IBM, Verizon. They're buying them all over the place when they release that data. But my point here is that we're at a tipping point for the market that's happening as we're at a bottom or very close to, a top or very close to a top for stocks. So this always goes back to watching one indicator, and you know which one it is. There are actually two charts that I show you every single day. Two charts, an E-mini, Ruby, let me get out there. An E-mini is just another type of futures contract, and it is exactly what it says. It's a smaller amount of money that you get to put down on it. You have your futures, your standard futures, and you have E-mini futures, which trade in smaller dollar amounts. So here are those two charts that we always look at, and why I want you to look at these now is if we're actually in a position where the market is starting to show that everybody's in, investors intelligence, everybody's in, the hedge funds, everybody's in, and then you've got the traders that are all in on this market. You've got to win in terms of the technicals, otherwise we fail. Now, we broke below the 200-day moving average on Friday, but right now with us being, and actually futures are pulling back a little bit, we're up 160 now, we're still going to crack back up above that 3,000 mark. Volume was high, showing that was being defended, and we're right in the middle on the relative strength. The thing that we want to watch, though, is the VIX. So the VIX moved lower, 4.79% is where we're sitting right now. It's still hashing out this little deal between right now. You've got the 35 and the 30 level. We've seen a bounce between. We're going to break higher, probably towards that 40 level. Good for those of us that are in the, I love that ticker symbol, Daniel. You know that. Good for all of us that are long volatility right now. Bad for those of us that are right now in that situation that I described here, where everybody is long. So two things that you watch now: 3,000 on the S&P 500. Write it down, put it on a sticky note next to your computer, put it on the note next to your bed so you wake up in the morning and see it, and on the VIX 35. I want you to watch those two numbers as we trade through this week. We'll see a little bit of a pullback in the VIX this morning. It'll try to get down below 35. I'll look and see where we are this morning ahead of the open. Give me just a second. But I want you to watch. We're 34.87 right now is what I'm showing here. So I want you to watch that 35 level and that 3,000. A combination of those two breaking, or both of those breaking at the same time, is going to tell you that this crowd of people that has been logging up and getting into long positions and covering their shorts are quickly going to turn their tune, and we're going to see them buying not only protection but hedge volatilities here. Now, brighter bars, Zachary, I will. So if the VIX moves, and this is Naveed, this is great because it's not a question on an individual stock, it's an individual question on an index here. So if the VIX moves above 35, it tells us that the option traders are now paying more for premium on their puts and calls. Historically, and if you go back to the 90s when this index first started trading, it gave you an index, or it gave you a view of what you were paying on 8 different S&P 500 options. And not to get too nerdly on you, but I want you to understand it here. So it was 8 different options. It was 4 front month, 4 back month, 4 from puts, 4 from calls. So it was a situation where they averaged the options to give you a quote unquote synthetic at the money, 30 days till expiration option. That has evolved, and now it's 16 options that go into that, and it's still an at the money 30 days. But the whole idea here is that people are willing to pay premium when they fear the market is going to go down. Just like if you and I see the house next door to ours on fire, and we're afraid our house is going to burn down and we don't have insurance. Well, if we call up the insurance agent and say, hey, there's a house next door that's on fire, I need to insure my house real quickly, guess what? They're going to charge you more for that insurance at that moment in time. But if you call when everything's quiet and maybe it's raining and there's no chance of a storm, the insurance agent's going to say, we can give it to you for a little cheaper because you don't have high fire hazard right now. That's the same idea with the VIX. It gives you an idea whether there's a high hazard for stocks. The higher it goes, the more hazardous stocks are, the more volatility is in the market. When we saw the readings in March, we got up to 80 and 85, and obviously we saw a bottom in stocks then, but it was only after we'd pulled back 35, 40%. So a 35 is a mental note right now that says, hey, if we close above, you can see it's not wanting to close above that. If we close above, you're going to see a market that's going to start selling off, and that VIX will start to move even higher. So there's your quick lesson on the VIX. Let's look at a sector breakdown for the day. And I'm going to do this every day now that I have to throw some more ideas at you. Sector breakdown for the week. What was I looking at? This morning when I was sitting up at 5:30 in the morning, going through my charts. Boom. Number 1, the QQQ. Sitting at what? It's Trader's Day, or it's Trader's trend line here. Last time we touched it was in the beginning of June. Every single time we've touched the 20-day moving average since this rally's ensued, we've seen it rally right back. So it's not strange to see the VIX right now coming back a little bit. You've got NASDAQ futures that are trying to get a little bit higher. We're about 10 high on the NASDAQ right now if we opened right this moment, with futures down 18, so your fair value is a little higher. But watch for a bounce off of the QQQ over the next day or so as we see those people that have been the Robin Hood, the people on the front edge of the buy the dips. We see them buy this dip, I believe, and move us back higher. 245 is going to be our resistance for that same group. When you look at that, what are 2 stocks that you can start to look at within that sector? Well, one of them, ADP. This is an important stock this week coming up because guess what's coming up on Thursday? Thursday, we're going to see the jobs report. We won't see it on Friday because the market's closed. Look at ADP. ADP trading below its 200-day moving average. This was pulled from my technical model this morning. Below its 200-day moving average, and the 20-day is rolling over. The 50-day has now leveled off and is showing a lot of support that is going to be at some point beaten down enough that is going to fail. We'll see it drop down lower. The other key thing that I like about this, low volume on ADP and the actual volatility. So when we talk about implied volatility, the VIX, it's what the market thinks is going to happen. This is telling us what has actually happened over the last 20 days. And what this tells you is that volatility has been closing down, tightening up, if you will. Anytime we see one of these moves where it tightens up, you normally see a large move in the underlying. You obviously saw one right here in February. That's cheating though. You didn't see any movement along with these, but now that we've got some more volatility in the stock, I look at 145 and a break of the 50-day moving average as an indication that this stock is in a little bit of trouble and could start selling off down towards that 130 level if we see, first of all, maybe a weak jobs report. Second, if we just start to get the traders in here selling. So right now I look at ADP as one of those stocks that a little bit of concern from my perspective in the portfolio. It is in the NASDAQ 100, has been an underperformer, which is another thing that goes to the reason that I like it. So you've got two stocks here, NASDAQ 100 on an individual. I like it for a short bounce here. And then you've got inside of that, the ADP, which is obviously going to have some effect on Thursday from the numbers being dropped on the unemployment or the jobs report. I hate calling it the unemployment report. That's the weekly number. And we'll get that on Wednesday as well as normal. Those are your two that I think you need to arm yourself as you go into your trading today. Now, looking at the recertification flight is going to give a bonus catalyst. And without us going through the ticker blitzes, we get to the end so quickly here, it's not funny. I'm going to have to beef it up with more tickers for you. And I'm going to go through your questions here and see if there's anything that I can answer that's not ticker specific in just a second. But Boeing's recertification flight is going to provide bullish catalyst for the Dow stocks. Expect it to be somewhat temporary. We've seen so many issues right now. Boeing still has a lot of cancellations that they're dealing with, et cetera, but it should give a bump to stocks. The NASDAQ 100 activity should remain bullish and heavily traded through Wednesday. Remember, short trading week, Thursday is going to die off. We're not going to see as much activity. And then we'll slow our trading down to on Wednesday as well as we close with a shortened week. Let me look at a couple things here and non-ticker related questions, as Laura's pointed out. Throw that into the blue box. I'm going in there right now and I see just two. Why am I showing the Friday podcast? Anonymous, this is Monday, June 29th. Not Friday. I wish I were good enough to have already recorded Fridays and have that in there, but that's not the case. Let's see. Daniel's making fun of my $3,000 or my 3,000 sticky note. We've got the E-mini. Amazon. Talking to each other. You know what? This may be one of the shortest morning opens out there. Tommy, yes. It is, guys. Porter, my shirt is purple. Not that matters at this point. Oh, Eddie, we're still asleep. 9:09, guys. Oh, here we go. Jay, actually, this is a good one. Expectations of the financials going up or down this week, because this is something I can speak to as a the sector view. This is one of those sectors that if you've listened to me for the last month, you know that there are a couple of things that factor into the financials activity around earnings. First of all, this is the sector that is most well known for its buy the rumor, sell the news type of activity. We have seen people pour into financials for no reason other than earnings are on their way. Then they hit their earnings, and usually they hit their nuts. So they usually get their earnings nut out of the way. Everything's positive, but people see this as a reason to sell the market. So it initiates a good sell the news in the market. Carries over in the technology stocks, usually 2 weeks or so. Then you see technology stocks offer a reason. So it acts as that first wave and a sine wave of buy the rumor, sell the news through earnings season. The financials are typically first. It's different this time around. Last week, we had the stress test. The Fed came out and said, we want you. They were looking at Goldman Sachs and saying, Goldman Sachs, we need you to stay a little more liquid because we're worried about your cash reserves. We need banks to cut their dividends. We need banks or to maybe hold on to their dividends. We need banks to not do any more stock buybacks. That activity that the banks announce in those earnings reports that make people go so crazy. So this year, and I think this year alone so far, the banks are actually going to see us sell the rumor ahead of the earnings announcement, which means we've got 1 to 2 more weeks of this selling pressure ahead of their earnings, and then perhaps a little buy the news on the quality names that are coming out of the earnings report. So as you're heading into earnings season, take a look at those XLF holdings, the companies that make up the XLF, and pick apart those for the companies right now that are seeing some headlines on their earnings, on their dividends, and especially corporate buybacks, the fact that they're not doing them. Small regional banks are usually going to have a little more sensitivity simply because they rely more on interest rates, which are now once again going lower. So that's a great way to analyze the financials as we head into earnings season here. XLF is one of the financial. You can use XLF. You can also use KBE. You can also use KRE for the regionals. Regionals are what I like to focus on. It's got companies like Fifth Third Bank, PNC, Huntington Bankshare, a little more sensitive and definitely more volatile. And as you know, volatility equals opportunity. All right, sectors to watch, Bill: energy, financials, large cap tech. Large cap tech, I believe, is going to continue to give you some leadership to the upside here because that's where the Robinhood era people are trading right now. Energy right now, especially with Chesapeake coming out and oil prices coming lower, a lot of pressure on that sector. Financials, you're going to continue to see more pressure on that. I'm looking more in the regionals. I like the regionals because they're a little more sensitive. And then alternative energy plays right now are doing well. That is an area that you may want to look into. Defense continues to lag right now. If you look at the defense spending, we're not seeing a lot of contribution or a lot of commitment to defense spending. So we're seeing companies that are in that sector that are actually CACI and a few others that I normally talked about quite openly, just not getting it. So I think this is, one of those markets where those are also some very good, lower volatility plays, if you will. Airlines, as you mentioned, there are a couple of them out there right now that are being picked on in terms of being the ones that are surviving. Watch the airlines as a group, watch the travel and leisure as a group, simply because, you know what, we're riding that high of the buy the rumor, sell the news, and a little more of the sell the news is coming in right now when you see some of these companies become downgraded on debt. That's really just setting the tone for a little more of a reality check. And as you know, I've been calling it an irrationality rally for a reason. These are stocks that have been going up just because there have been more buyers and sellers, not because the fundamentals or the technicals made sense. All right, with that, 9:15, do me a favor. Drop a line either in the question on how we can make this a little better for you. I've got your tickers, obviously. What can I do to make this a little more interesting? More data, more charts, more what? What's going to make you come away from this a more educated and a more equipped trader for the day or the week following? All right. Feel free to do no more bifurcated. We can always talk about bifurcated, Jesus. Always talk about bifurcated. That's one of my favorite words to use. You know that. You guys can catch me this afternoon on TD Ameritrade's network as well if you like. I'll be on at 1 o'clock or 1:30, I believe it is, with Nicole. We'll be talking about semiconductor companies and a couple of other things there. So try to tune in and catch me there as well. Other than that, I will see you tomorrow at the same time. 11 o'clock, people. We're taking the day off one more time. Let me get a little more footing below me on what we're going to do with new development on our half an hour time there. All right. Hope everybody has a great day, and we'll talk to you tomorrow soon. And I always wish you the best trading success.